Now, of course, moving on to gold on the 4-hour time frame, we can see we've had that 4-hour break of structure down. We have our swing high and we have our swing low. Now, previously we had this retracement in towards a point of liquidity. We did take out this, but at the time we were wanting to see this get taken before we seen this internal trend start to form in towards the downside. But since then, we did see a lot of liquidity left open above all of these highs, and it made sense to see some upside price action to take out these points of liquidity. Since then, it's a little bit difficult to tell. We've just been sort of chopping around sideways. Obviously, FOMC gave a push up, but since then, we've been pushing back in towards the downside. Before FOMC, I was definitely anticipating this week's swing low to get taken rather than pushing up any further, especially after we've seen this driving towards the downside again, creating this area of supply. I was anticipating this would hold and push price further down again. If we go down though onto the 1-hour time frame, let's see if we can get a clearer understanding of what is happening, because although we are swing bullish, it does make sense for me to see some lower prices. It's not like this high here failed to break this high and therefore this low is the target. And again, this high has failed to break this high, so this low for me is the target. And if we were to take out this low, for me, we're going to take out the swing low itself. So for me, I am bearish on gold, but I'm not potentially looking for a position. I don't really know where you could enter from. This is the demand zone still in control. So if we break that, we're pretty much at the swing low already. So gold, I'm probably waiting for further developments next week. I might look for a potential pullback trade from after we break this swing low, but I will just see how price starts to develop to end this week and to start next week. And finally, on to Bitcoin, we can see on the daily time frame that we've had this break of structure in towards the downside, and this is the current swing range that we are trading within. Now, from a liquidity standpoint, it does make sense to see this high get taken, see that structure shift, and then try and look for a short position down towards the weak swing low. But there is still this point of liquidity, or this point of liquidity still open, which the market could want to come for before then looking for that next short and towards the downside. If we go down though onto the 4-hour time frame, what we can see is we have had another break of structure in towards the downside. We have our swing high and we have our swing low. We've taken out all the available liquidity within this impulse. We've then seen this demand zone still currently hold. We haven't had a break and a close below. If we do see a break and a close below, I'll be looking for a short from the most recent supply zone to start trading it down towards the weak swing low.